Hello and welcome to AI Market News by LM. All right, let's get right into it. There is a huge shockwave ripping through the global markets today, and it's all coming from one single company. So it's November 20th, 2025, and after a couple of pretty jittery weeks, it feels like the markets are finally taking a huge collective sigh of relief. From Tokyo all the way to New York, we're seeing a massive shift back into risk-on mode. But here's the thing. This isn't just some random, scattered rally. Nope. It's laser-focused, all driven by one explosive piece of news that, honestly, just completely flipped the script overnight. So let's get to the source. And yep, the catalyst is NVIDIA. The AI chip giant just dropped an earnings report that didn't just meet expectations, it absolutely obliterated them. CEO Jensen Huang put it pretty simply, saying sales are, and I quote, off the charts. This right here is the NVIDIA shockwave. I mean, these results were so good, they've basically erased all the recent fears that the AI trade was starting to lose steam. Whatever Wall Street was hoping for, NVIDIA just blew it out of the water. CEO Jensen Huang also confirmed that demand for their new Blackwell chips is just overwhelming. But get this, here's the really wild part of the forecast. China's not in it. NVIDIA is projecting zero, that's right, zero revenue from China because of US restrictions, and they are still crushing it. That just tells you everything you need to know about how dominant they are everywhere else. And that kind of confidence, well, it's infectious. It's creating this massive ripple effect, a huge wave that markets all over the globe are trying to catch. So looking at the US, futures are pointing to a really strong open. And no surprise here, the tech-heavy NASDAQ 100 is leading the charge, up well over 1.5%. But we're seeing that optimism spread across the board, with the S&P 500 and the Dow also looking very healthy. And wow, if we look over at Asia, the rally was even bigger. Markets that are heavily tied into the chip sector and NVIDIA's supply chain just exploded higher. Taiwan was up over 3%, Japan's Nikkei had a massive 3.5% jump, and Korea also saw a really solid 2% gain. Now, over in the currency markets, this whole risk-on mood is putting pressure on the Japanese yen. The dollar is pushing up towards that critical 157 level. And let me tell you, that is a major line in the sand. Traders are going to be watching that like hawks for any sign of intervention from Japan. Okay, so for all this excitement, we gotta pump the brakes just a little. We need a dose of reality. And that reality check is coming straight from the Federal Reserve, which is kind of casting a shadow over this whole party. Which really begs the question, right? Is the market getting a little too carried away with all this AI-fueled excitement? Are we maybe overlooking some pretty big red flags? Well, if we look at the latest minutes from the Fed's meeting, the picture they're painting is way more cautious. A lot of the policymakers are saying, whoa, not so fast on a rate cut in December. They're still worried about inflation. And what makes it even trickier is this data fog from the delayed jobs report, which means the Fed is flying a bit blind.
And the market? It's definitely paying attention. Right now, the odds of a Fed rate cut in December are priced at just 30%. So here's the bottom line. While the tech world is popping champagne, the broader market is still betting the Fed is staying put for now.
And just to add another wrinkle to all of this, we've got some geopolitical noise bubbling up in the background, especially over in Asia. So what's happening is that China has reacted, and reacted strongly to comments the Japanese Prime Minister made about Taiwan. Beijing has gone as far as telling its citizens not to travel to Japan, and has even halted some Japanese imports. And then, the US ambassador to Japan stepped in and said America has Japan's back, which just adds a whole other layer to the tension. All right, so that's a lot to juggle. What's the next big thing we should all be watching? Well, all eyes are now laser focused on the next major piece of economic data, which could either supercharge this rally or bring those Fed concerns roaring back. And we are talking about the US jobs report for September. Expectations are super low, just 22,000 new jobs. And this report it's absolutely crucial. Why? Because a weak number might give the market the green light to keep running. But a strong number, that's gonna bring all those Fed inflation worries right back to the front of everyone's mind. Now, this jobs report is obviously a huge piece of the puzzle, but it's not the only piece. To keep track of everything that could move the markets, the economic calendar over on investing.com is really an indispensable tool. And that really leaves us with the million-dollar question, doesn't it? Is this jobs data going to pour more fuel on this incredible AI rally, or is it going to slam the brakes and drag everyone's attention right back to the Fed? We are definitely going to be watching closely. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching, and if you found this breakdown helpful, don't forget to like and subscribe for more.